Welcome back for another top-notch video, guys. This week we're going to be talking about the weekly review for December 4th through December 8th. This week, for the most part, guys, some of the major talking points that we had were we saw a pretty healthy bounce on Thursday when we did our assessment, both for large and small caps. Okay. The Dow, or the S fund, did gain 71 points on this day. And basically the big talk of the week was the House and Senate did pass government shutdown, so that will not occur. Now the new deadline for that is December 22nd, so be looking for that in stocks. So let's move right into it. As always, we have our life cycle funds, which I don't do an analysis for. G fund, which is defensive stocks, but we're not being defensive as the markets are rallying at this time. So let's move right into our C fund, or the S&P 500, and what that's been doing. As you can see, we had a little bit of a bounce this last week. We ended up making a pretty good gain off our C fund for the week, so we're doing well. We're very far from our bottom resistance line. We're still hitting that top resistance line. Let's look at it at the other charts. On our weekly chart, we did post another positive bar, so more energy for our IVV or C fund, or S&P 500. Another very good week, guys, for the S&P 500. We're starting to get very close to the bubble, so just be aware of that. But because we have this positive energy here, and we are the blue instead of above red for our PPO versus our moving average, I would say this is a great stock to continue to put funds into. So let's move on to the next stock that we have, which is the S fund, or ETF VXF. This is the Dow Jones. Let's take a look and see where we're at with the Dow Jones. A lot of down movement towards the middle. We did have an up spike towards the end of this week, but we did have some decent down movement. We did end just a little bit under for the week, 0.39 under the week. So just be aware of that. That's where we mostly had our funds allocated. And I'm going to say we're going to take that bounce and roll with it. Looking at our charts for VXF, we did have a little bit of, we were sitting at, for deliver for the DO at the very bottom of the screen there, we were sitting at 1.95. And then we did end up moving to 2.09 that second week. And then this week we did move down to a 2.03. Based off this information, guys, it'd be better to stick your money into the C fund for this week and not the S fund. It was a positive week, and just something to bear in mind. Just something, the probability says that we're still headed in a down energy market with this stock. So for our S fund, it might be good to move our allocation, and we'll show that a little bit later. Moving on to the I fund, EFA, ETF. We had a nice positive bounce with ETF coming out of that kind of down blip there from our top resistance line, and hit that bottom resistance line and headed right back up. Based off our charts, ETF was doing still negative numbers here and negative energy. Not something I would look into investing into just yet. We'll keep a very small allocation in here, but it is a very positive sign to see that ETF is starting to move up, or the I fund is starting to move up. I would seriously, the probability shows that this will probably continue, guys. So good news there if you're into the I fund. Looking at our, let's just look at a 2-day chart. 2-day chart still pretty negative as well. Not a lot of positive action. Where our DO is -5.5 here, and it was -6.3 here. So something I would just not have my full portfolio on. Biggest thing we're probably going to consider still is the C fund. But let's move into bonds and just check that out. Looking at bonds, we did hit our top resistance line, and we've just had couple of times here where it hasn't been able to make it over that 109.60 mark, and it's going to continue to go back down. I'll probably hit this 109 mark again. So just be aware of that, and let's make sure that charts support it. As you can see, we're still on our, oh, let me pull up the weekly chart real quick. On our weekly chart, it's still coming out of the negative energy, but we are still in negative territory with a 1.71 last week, and this week a 1.44. On our 2-day, just to give you guys a look at that, we are losing positive energy. So this is just not a stock, not a fund or a stock or an ETF I would look into getting into in the near future, guys. I would stay out of bonds. Continuing on, let's take a look based off of bonds. So that's basically the review for this week, guys. Don't really have anything else for you other than we did do well with the funds that were in our the C fund or IVV. We did gain 0.39 for the week, so that was good. And then for our EFA, we did gain in that one as well. We ended up picking up just 0.1 for that week, but still in the positive. Now, where we had most of our portfolio was in the S fund, and we did lose for this week, so just be aware of that. So we're going to do a little allocation shift for this week to the C fund. If you guys have any questions or concerns, you can go ahead and write them in the comments below. And this is our allocation for this week. G fund 0, C fund 60. That was the biggest move. We went from moving most of our portfolio from the S fund to the C fund. We did keep quite a bit in the S fund, just so we want to gain back that 0.39. The S fund will come back, so just a small shift. Just because the C fund had more positive energy than the S fund. The S fund did have that down negative week, whereas the C fund had positive week. So we're going to go 60, 30, and 10. Again, if you guys have questions or concerns, go ahead and write them in the comments below. Really appreciate you watching this video. Give me a like or subscribe, and we'll see you guys next week. Yo.